Hey, everyone. We are back live again. Another episode of our Facebook Live. Tonight we have Jayden here with us, our partner, our Toronto guy, and we call him our Canadian partner. And tonight, Tom's not going to be here, unfortunately, because he had some errands he had to run. So it's going to be myself and Jayden. So my name is Dr. Noah Liu. For some of you new members who don't know me, I'm one of the admins here in the group. And today we are going to be sharing something really, really cool. It's called the Toronto deal. It's a brand new asset. And Jayden here is here to share some interesting news and how we US investors can get involved in this deal. So without further ado, Jayden, the floor is yours, man.
Well, thanks for having me on again. I really appreciate it. This is quickly becoming one of my more favorite groups to interact with and deal with. Um, for the Canadian members of this group that are currently partners, I plan on sharing just some quick updates with where we are with our current projects. I'm happy to report that there are some incredible federal and provincial rebates and incentives supporting what it is that we're trying to do. And for the American viewers, I'm happy to report that I'm actually broadcasting live from New York City. So I'm officially American now. I'm one of you. I'm down here living in the States. So I think it's going to give me some interesting perspective for what I'm seeing here on the ground in New York City and how it relates to the city of Toronto. So very, very exciting news that I want to tell everybody right off the gate. Canada has ended its foreign investors ban, which means American money can now come into Canada and come into the city of Toronto as passive investors, and you can reap the benefits of owning in the city of Toronto. So that is groundbreaking news. The fact that we can
Love
bring
it.
in American money to Toronto real estate deals is going to create a ton of value for all the American members of this group. I want to talk about quickly why Toronto, why now, and then we can get into the minutia of the deal that we currently have. And I've followed this cadence before in the past. I've followed trying to sell the members of this group, explain the benefits of investing in the city of Toronto, the features, the advantages, and the benefits of it. Um, Timing, as we all know in investing, is everything. So I'd like to get into details of why now presents such a unique opportunity for American and Canadian investors to invest in the city of Toronto. And then, of course, I'll get into the who, what, where, when, why, and how of our specific deal. So, yeah, let's just get right into it.
Let's do it. Let's do it.
City of Toronto. Listen, I'm from there. I'm Canadian. Of course, I have some bias, but I think that I now have a very unique perspective by virtue of me living in America, um, occupying real estate in America. I'm working on a couple infill deals here right in Manhattan. So it's given me some perspective of acquisition costs, construction costs, appreciation costs, and ultimately returns from an investment standpoint. Over the last year or so, I have looked into investments across the United States, ranging from Texas, Florida, Arizona, Ohio, and now New York State. And I've always compared it to what we have going on in the city of Toronto. And, well, there's no clear winner, and I can't give you advice as to where to put your money in any one of those states or in Canada. I can compare and contrast them pretty accurately now. So let's just talk about what makes Toronto, Noel, so unique, such a unique investment opportunity. Um, your members have heard me in years past talk about Toronto as New York 20 years ago, in owning in a city where land is incredibly scarce and land they're not making any more land in Toronto. Toronto is a landlocked city because we have the water to the south and we
Correct.
have what's called a green belt that wraps around the city of Toronto. So we're kind of separated by a forest, large waterways, and then Lake Ontario. It has similar attributes to New York City in the sense that land is scarce and all the land is already spoken for, right? So, what is driving Toronto
Yeah.
real estate? Right? Like, what makes Toronto real estate the hottest North American real estate that one can own right now? And it's population growth, right? It's
I
population
think
growth.
it's stability. in that area. You know, the country's stable, the city is stable, and like you just said, I love the fact that it's geographically it has a high barrier to entry. And like you said, there is no more land. Where else are they going to build, right?
You bring up a really, really good point, and it's not one that I touch on often, but natural disasters have become incredibly important in the underwriting of real estate deals. Okay. Look what has happened to Florida real estate. Look what has happened to those that own Florida rentals in certain parts. It's harder to get a mortgage, it's harder to get insurance, and it's harder
Mhm.
for investors to underwrite these deals in areas that are prone to natural disasters. The city of Toronto is completely insulated from natural disasters. Uh, let's talk about political stability. Regardless of where you fall on your political spectrum, um, we can see how the changing of certain powers can impact the stock market, the value of your dollar,
Yep.
um, whether your investment's going to be rent controlled or whether it favors the tenant. The city of Toronto is a very politically neutral global city,
Mm.
right? There's a lot of political stability in the city of Toronto. There's a lot of stability in our economic system as well. And I mean, if you don't believe me, quickly Google top 10 places to invest globally. And you'll see people from Dubai, you'll see people from the UK, you'll see people from all over the Americas trying to get their money into Canada. Why? Because it's stable, because it
100%.
provides constant stability in terms of yield. All right. Now, that's not always attractive. I can appreciate that there's members of this group that like a little bit more risk and want the higher return.
Hmm.
Well, I mean, listen, let's talk about returns. The city of Toronto right now is going through one of the largest booms in population in Canadian history. In 2022, Canada's population grew by 2.7%, over a million people, which may not seem huge to you Americans down here, but it is massive for Canadian growth. This is fueled by immigration. This is fueled by all the other virtues that I talked to you about in Canada. Stability. A lot of people want to move and live in Canada. When people want to live in Canada, this drives up the demand for rents. Immigration targets. Canada right now is targeting 465,000 new immigrants this year, 500,000 next year.
Mm.
This puts a huge strain, given the fact that they all want to live in urban centers, and Toronto is the urban center to live in Canada. This puts a huge strain on housing. This drives rental values up, property values up, because Canada's in a housing crisis, right? Like a good business model is to own rental properties and creating rental supply when you're in a housing crisis.
100%.
Um, Obviously, population growth, when we talk about population growth, where do they go? They go to the major cities, right? So Toronto right now is seen as, I believe, third largest tech hub in all of the Americas. Toronto is pacing up there with your California, pacing. It has a massive professional industry that draws in young professionals and young families that want to live in the city of Toronto. They do it for job opportunities. So Toronto still has this global allure. When people move to Canada, people move to Toronto.
You know, one
Now,
thing I gotta add, Jaden, is to your point, it's the rental market. It's hot, man. I mean, a lot of times these young professionals, when they're coming in, they're not buying a house or they're not buying like something where they're gonna own it. It's becoming another like like how we have it down in Dallas. It's a renters nation, and that's what I see Toronto kind of becoming a little bit because of the cost of
but it
living,
is.
right?
The cost of living has gone up. I mean, like, listen, our tenants are young professionals. Our tenants are
Hmm.
young professionals that make a ton of money, that like to live in nice units in downtown cores close to transit, and then they want to move every 2 or 3 years. That's who our
Absolutely.
tenants are, right? And they're great tenants for our business model. We build units to cater to those tenants. We build downtown in the city of Toronto. We build along transit lines. We build nice, beautiful, big units that are 1,000 square feet, and they command
Love it.
top rent, right? Um, Look, Toronto alone is home to over 3 million people in the downtown core. That number is supposed to grow to 6 million people in the next 20 years.
Wow.
Owning purpose built rentals is a bulletproof business model.
Love it.
Um, so, like, we've talked about economic growth, we've talked about job creation and job growth, we've talked about why Toronto is in money. Why now? Why is it important for Americans to get their money into the city of Toronto right now? Just saw this buyer ban, right? Who knows if the Canadian
Mm-hmm.
government is going to restrict foreign investors again? So timing is incredibly opportunistic to get your money into Canadian real estate now. The city of Toronto has done something completely unprecedented, which is remove all these bylaws and all these restrictions on development. Typically, the things that I build could take upwards of 4 years just to get approved from the city. Right now, we're getting them approved in 6 months, which means your capital gets put to use. Let me give you a quick anecdotal story. There are members in this group that cut me checks for, say, $100,000. Their capital was put to use within 30 days of them giving me that money. We had shovels in the ground, we
Mm.
had excavators on site, we started developing. In fact, one of the projects that I actually pitched here about a year ago is almost done. That means that these investors can have a finished product almost in a 12 to 18 month time frame. That's insane. So Toronto right now is removing restrictions on development. They're making it easier and cheaper for us to get our money deployed in these projects.
Love it.
Um, the federal government, because of our housing crisis, is now waiving tax on purpose-built rentals. Typically, our builds can cost anywhere from 1.5 to $2 million to build. That's 150 to $250,000 in savings just from waiving the tax on a federal level. So that's never been done before. The third project and the incentive right now is our financing terms. In
Mm-hmm.
America, you guys have long amortization periods, you guys can have long rental terms. Um, in Canada, for the first time ever, we're following your suit. Canada right now is allowing these long AM periods, very, very low interest rates. Like the interest rates that we are getting on our projects are in between 3 and 4%. Why? Well,
Wow.
A, the federal government is trying to spur rental developers like me. And B, they also want energy efficient rentals. Well, my background is in energy efficiency. I've been building energy efficient buildings for 15 years. So all of our projects from the ground up meet and exceed energy requirements. So as such, our investors get to appreciate and benefit from these incredible financing terms. These are the things that make our investment a no-brainer. Absolute no-brainer. The incentives, the rebates, the location, the timing of the removal of the restriction of foreign money. It's an incredible time for Americans to come up and own a piece of the pie. So now we can just get right into what projects I'm talking about.
Let's do it.
Sure. I'm going to share a screen right now. There we go. We are currently working on an absolutely exciting project for a few reasons. This project is going to be one of our highest density to date. We are building a 20 unit along Queen Street East in the city of Toronto. For Canadians in this group, you know the neighborhood I'm talking about. For Americans in this group, I encourage you to look it up. It's called the Beaches in the city of Toronto. Um, I know I have Riverdale up here right now, but the larger neighborhood is called the Beaches. Very coveted, very high end, very in demand, transit oriented, downtown. You're flanked by Lake Ontario to your south and the city of Toronto to your north. Same business model as we've been doing for years. So I want everybody to know that we are now being recognized as the 4+1 guys. What we do, we convert single family homes to purpose built rentals in what's called the missing middle, low density or gentle density, um, in transit-oriented neighborhoods. They're great for communities. People want to live in them, and people will pay top dollars to live in these in downtown urban cores. So we are sticking with the program. We are sticking with the routine. We are moving forward in what we have practiced and mastered over the last couple of years of development. The returns here, don't get too caught up in the total offering, but the returns here are something that you can take to the bank. We are targeting 4% total return on money, 49% average annual return on your capital, annual operating return on 18 to 19% in the first year of operation, and your annual operating cash on cash returns are hitting double digits in your first year of operation. The location of our property, again, central to transit orientation, central to downtown, and it's important to know I can drive a bicycle to all of our properties when I'm in the city of Toronto. Our business partners, Paul and Dennis, one of them is a construction manager, one of them is a private equity guy. They are on site every single day. These are buildings and developments in our neighborhood. We are intimate with the surroundings. We've all lived there for a total of 45 years between the three of us. All is to say, we're very familiar with what is going on in this neighborhood. The development that you have here on your screen is exactly what we're doing. I believe that there are economies of scale when you rinse and repeat a successful business strategy. We are converting single family homes to 4 and 5 unit developments. Very simple, easy construction, purpose-built rentals, and ground-oriented. What we have noticed since COVID is the massive spike in demand for people that do not want to live, well, rather, people that want to live in ground-oriented, purpose-built rentals, meaning no elevators, no concrete box in the middle of the sky, and they don't want to live in the concrete jungle. They want to live in communities. They want to live in neighborhoods where there's cafes and restaurants, parks where they can walk their dogs, walk their young families. People tend to be graduating I guess, yeah, graduating up from these little concrete boxes to bigger purpose-built units. We believe that we are building a better product than our competitors because we tick all of those boxes. I try to highlight our floor plans for both our laneway suite and the main unit. They're big and they're new and they're spacious. They attract the younger, wealthier millennials that are our tenant class. As usual, I'm always standing by to answer the nitty-gritty questions that individual investors will have for me. I can kind of go through the return profile on a more individual basis in the event that you reach out to me.
Mm-hmm.
You know what? Maybe I could share actually some of our updates with our current projects, if that is okay, for some of our other projects. Do you think that there's any interest in people seeing like our developments that we currently have, so construction pics or?
Yeah, I would say that would probably be a good idea because so in this way people have a little bit of, like a visual of what's going on and what are we talking about here, for sure.
Sure. You tell me what you think people want to see here. So this is when I
How
first.
how far is the Gerard Street one coming along?
It's well, this is it right now. I mean, you were there in the summertime.
Exactly.
Um,
By the way,
there's
ladies and
our
gentlemen,
laneway suite that we're building. Sorry to cut you off. There's our laneway suite. That was
yeah,
it
that
last
wasn't
week,
there.
I imagine. Yeah, that
Yeah, that
wasn't there.
wasn't there. Uh-huh.
I would say, I mean, oh, here's some exciting information. We already have a tenant. We already have a tenant for this laneway suite. Somebody has already signed a lease agreement. You want to talk about City of Toronto and its demand? Somebody has signed a lease agreement over the forecasted rent that we had in our pro forma. For more money than we thought we were going to get for this, somebody's already signed a lease agreement for this laneway suite in the
Can you
condition that
share
it's in.
can you share the pro forma rent you had initially on paper like a year and a half or 2 years ago?
Well, I can tell you right now, pull it up if you'd like. Um, can you see that?
Yep.
I believe, I mean, I know the numbers off the top of my head. It's $4,500 a month for that laneway suite. I'll pull up our pro forma right here. So our laneway suite was 1,666 square feet at $2.70 a square foot,
That's
44.98. So our forecasted rent was $4,500 for this laneway suite. We just
mm-hmm.
signed our first tenant at $4,600 in this condition. I find that absolutely crazy. I mean, but if the members of this group are looking for a testimonial to how hot Toronto real estate is, there it is. There's your example. It's already rented. Um, so construction, yeah, it's coming along incredible. I mean, I don't know if you saw it quite like this,
No, they didn't have those balconies at
stairs
that
or
time.
the balconies. Yeah. So
Mm-hmm.
the balconies are on. The main unit is all but built. We're just kind of putting our finishings on it. Um, that's kind of how it looks right now from the front. Well,
It's pretty
it's
sharp.
tough. I mean, so much work gets done every single day, but that's what it used to look like on the right, single family home in a very desirable neighborhood, and now it is a fourplex with a laneway suite in the rear. These things will cash, or their NOIs are about $250,000. What the rent is like in the city of Toronto. 5 units will
Mm-hmm.
roughly generate $250,000 in NOI annually. Let's see here. We have another project down the street, which I think is pretty cool. Um, and I can quickly share some updates there if you'd like. This is kind of a
Yeah,
cool
let's do it.
picture. Yeah, this is kind of a cool picture. We ripped we ripped the roof completely off. So this is it. No roof. We're adding the addition right now. This is
Mm.
going to be a fourplex with big, bright, spacious, open design, and we have a garden suite in the rear. Um, Same macro numbers here, about $250,000 a year in NOI. Um, let's talk about how these investments work for our American partners. So, as an American, your money goes so much further than it does down here in America. I hate to say it, but you can buy Toronto real estate on a 30% discount right now with the power of your dollar. Our dollar is so weak compared to yours. Um, if I was American, I would just be looking to capitalize on that arbitrage alone, just that delta alone. The fact that your
Mm-hmm.
money you can go buy, partner with us and own 100% or 90% of one of these things for $1 million, and it's cost you $700,000. It's crazy. Um, yeah, I think that the ability to get American money into Canada right now should be something that all of your members are taking very, very seriously. I mean, for all of the reasons that I've highlighted.
100%.
Um, so let's talk about how an investment would work. We have this deal right now. We should be breaking ground in the spring of this year. You would give me whatever, a dollar, $100,000, $1 million, whatever it is. Your dollar is returned to you upon completion of construction. And how we do that is we refinance with a federal program called CMHC. It's our federal insurance company on purpose-built rentals.
Mm-hmm.
So that allows us 95% loan to value, 1.1 DSCR. So our loan amount is increased just by those two financing terms. Our interest rate right now on a 40-year amortization is as low as 3.2%. We
Love
just
it.
had an interest rate. Yeah, we had an interest rate drop 2 weeks ago, 50 points. So our
Nice.
prime has gone down to 6.2%. Great time to be in the space. So for your American partners, your initial return of capital is returned to you by refinancing proceeds, and then you own a purpose-built rental. We manage it. We are the personal guarantors on the debt. We take care of the tenants, the toilets, the termites. You sit back as a passive investor, you earn a preferred return, and then you, of course, earn profit sharing for all the profit above and beyond your 8% preferred return. Us as the general partner, we do not earn anything until your capital has been returned and until you have your 8% return on your capital clawed back from day one of operations when the building becomes tenanted.
Those are great numbers, man.
Great numbers. And I mean, like, listen, I'm biased, but I believe that the underwriting of these deals, the risk profile, is as low as you're going to see on just about any deal you're going to see come to market.
Oh, it's great, Jaden. So I was just doing the calculation. It's like you said, 70%. So 100,000, that's like about 71 to $73,000, depending on the market, right? So that's a pretty darn good deal. And like you said,
I
it's almost
Yeah,
30%.
it's crazy. I wish I earned my money in American. Like, I wish I had American money right now, but um, yeah, it's look, you saw a lot of American and Canadians going down to Mexico about 5 years ago and investing in Mexico because the power of our dollar. The
Right.
risk, unfortunately, is that you are investing in Mexico. They have different federal restrictions on foreign buyers. And we all know, like, the political risks, and they're just, it's different underwriting. The fact that you can now put your money in Canada and have the assurances and the safety of no political strife, pretty strong economic powerhouse behind it, no natural disasters, you're in the city of Toronto. I think it minimizes risk incredibly, given the return profile. I
Correct.
think, like, the risk is low and the return profile is high. For that reason alone, it's a slam dunk.
And for various other reasons too, that the one you mentioned this earlier, this on this pod here. So you were like, there's a lot of immigrants coming in. There's a lot of immigration. All that stuff's coming in, but everybody wants to stay in the city, and there is no other place for them to go. What's going to happen? The rent's going to go up. So the space that I'm seeing, like you just rented out the Laneway Suite for $4,600. I have a feeling like by the time it's complete, the valuation could be a lot higher.
Absolutely. Toronto's average rent increased 10% year
Hmm.
over year in 2023. That is just reflective of its strong demand. Um, I think that trend indicates significant potential for passive income, for rental properties.
Hmm.
The demand is fastly outpacing the supply. So, like, all of your macro factors that one would look for a good investment, they're there. They
Correct.
are all there in the city of Toronto, right? And the best part is, you're not putting your money in some city that you've never heard of before.
Right.
You're not putting your money in a secondary market, uh, that there's some questions on what if. Toronto is a very, very solid place to put your money. Again, imagine New York City 20 years ago. Imagine New York City 20 years ago, and you have an opportunity to own a multi-rental. The the appreciation is going to be there. But even if it's not, we have the strong underwriting of like rental demand in the city of
Correct.
Toronto. We are not rental controlled because it's new construction. There's no
Correct.
rent control. There's 10-year warranty on everything. So there's not going to be very high operational expenses or maintenance expenses. They're new units. We command top rental rates. Yeah, I can go on and on. This is what I want to leave the members of this group with. Everybody has my contact information. Everybody can reach out to me. I would love to meet with my American members of this group. I've met with so many of you over the last year or two, but the story's always been the same. We can't get your money in. We can't
Right.
get your money in. I'm sorry. Or there was all these additional costs we had to incur.
When is this ban coming up again? Jan 1st?
First, and I mean, look, by the time we're bringing money in for this deal, it will not affect you.
Correct.
We have lawyers on it. We're already working on how that's going to look, bringing your money in. But the time is now. Strike when the iron